In today's market, speed is absolutely everything. AI, social media, they can turn a stock into an overnight sensation. So how are you supposed to navigate all that in 2026? Look, this isn't about having a crystal ball and predicting the future. It's about building a disciplined framework, a set of rules to protect your capital no matter what the market decides to throw at you. So let's dive in.
And that question really gets to the heart of it, doesn't it? We have more data, more powerful tools than ever before in history, but the biggest things getting in the way of our success, they're not always out there. A lot of the time, they're internal. So we're going to focus on mastering the one variable you can actually control, your own discipline.
So, our first battleground, it's right up here, inside our own heads. Let's break down the psychological traps that can completely sabotage even the most brilliant analysis before you ever even think about placing a single trade.
This is the classic trap. And let's be honest, we've all felt it. That knot in your stomach, the panic to sell when the market is dropping, and that intense fear of missing out, FOMO, when something is just skyrocketing. That's pure greed and fear talking, plain and simple. Professionals, on the other hand, they don't rely on gut feelings. They rely on predefined systems that tell them exactly when to buy and, just as importantly, when to sell. The whole game is about taking emotion out of the equation.
Okay, this next one is so critical, and it trips up a ton of people. You might buy a stock for what you think is a quick, short-term trade, but then it goes against you. And what happens? You start telling yourself this story, oh, I'm not a trader anymore, I'm a long-term investor in this, right? All just to avoid taking the loss. That is an absolute recipe for disaster. Investing is about patience, about a company's fundamentals over years. Trading is a totally different game of probabilities and strict discipline over a much shorter time. You have got to know which game you are playing before you even start.
So here's the bottom line. Getting into a position without a plan isn't investing or trading, it's just gambling. For every single position you take in 2026, you absolutely need a written plan. Why are you buying this specific thing? At what price are you going to take your profits and walk away happy? And here's the most important one. At what price will you admit you were wrong, cut your losses, and move on? This isn't just a suggestion, it is non-negotiable.
Okay, so let's say you've got your mindset in check. What's next? Well, the second major challenge is mastering the data. So let's look at the analysis traps that come from the absolute flood of market information that we're all dealing with every single day.
I mean, think about it. In 2026, a stock can go from zero to hero overnight, all because of a few posts on Reddit or X. The big mistake is confusing all that social media hype with a solid, fundamental reason to own a company. The discipline is to tune out the noise and actually dig into the data. What are the earnings really like? What's their cash flow situation? Is there real innovation here, or is it just really good marketing? The hype can lie, but the numbers, they rarely do.
Now, AI, it's an unbelievable tool for sifting through mountains of data and spotting patterns we humans could never see. But that's exactly what it is, a tool. Think of it like a superpowered calculator, not a crystal ball. Just blindly copying trades an AI spits out without understanding the why behind them, that is a massive, massive risk. The smart way to do it is to use AI to make your own analysis better, not to replace your own judgment entirely.
Right, so no stock lives on its own little island. The bigger economic picture, what we call the macro environment, it affects everything. For 2026, you got to be tracking the big stuff, like what the Federal Reserve is doing with interest rates, what inflation is doing, and how strong the dollar is. Think of these as huge ocean currents. They can lift up every single boat or drag them all down, no matter how good your individual stock is.
Oh man, this is a lesson that so many people learn the hard way. You can find the absolute best company in the world, revolutionary products, amazing growth, the whole shebang. But if you buy its stock at a ridiculously high price, you can still lose money or get terrible returns. Price matters, valuation matters. A fantastic company bought at a terrible price is a bad investment, period.
All right, so we've talked about what's going on in your head and how you look at the data. Now it's time for the final piece of the puzzle, avoiding the traps when you actually go to click the buy or sell button.
Let me be crystal clear about this. This right here, this is the #1 killer of trading accounts, bar none. No exceptions. It's jumping into a trade without a stop loss, that predefined exit point where you get out, or it's just risking way too much of your money on one single idea. Discipline here isn't just a good idea, it is literally about survival.
Okay, I want you to burn this number into your brain. Seriously, if you forget everything else I've said, remember this. The golden rule for 2026 is simple. Never, ever risk more than 1 to 2% of your total capital on any single idea. It's the ultimate survival rule. It guarantees that one bad call can't take you out of the game for good.
With the market moving so fast, it feels like there's a huge opportunity every 5 minutes, doesn't it? It just feeds that FOMO. And that feeling pushes people to take way too many low-quality trades. But the pros, they know that a lot of the time, the smartest move is to do absolutely nothing. They wait patiently for the really high-quality opportunities. You have to remember, sitting in cash is a position.
You've heard it a million times. Don't put all your eggs in one basket. And it's a cliche for a reason.
Because it's true. Going all in on one stock or one hot sector is just incredibly risky, because what's hot one month, say AI, could be ice cold the next, while energy suddenly takes off. A balanced portfolio with things like index funds and exposure to different sectors gives you a crucial layer of defense.
Okay, we've spent a lot of time talking about the traps, the mistakes, the things that can go wrong. So now let's flip the script. Let's talk about the solutions. This is your winning playbook for 2026.
This right here, this is basically your roadmap to sanity and success. Step 1. Focus on a repeatable process, not on trying to predict the future. Step 2. Accept that market swings, volatility, are totally normal. Step 3. Stop looking for certainty. It doesn't exist. Start thinking in probabilities. Step 4, and this is a big one. Your number one job is to protect your capital. Profits come second. And finally, step 5, stay disciplined, especially when AI makes everything move at lightning speed.
You know, this quote really just sums up everything we've been talking about. The winners in this new market aren't going to be the ones taking the craziest risks. Nope. They'll be the ones who are consistent, who control their emotions, and who manage their risk day in and day out. That's how you build real, lasting success.
So that's really what it all boils down to, isn't it? The 2026 market is going to reward one group of people above all others, the disciplined. The tech, the data, that's available to pretty much everyone. The real edge, the thing that will separate the winners from the losers. It all comes down to discipline. So the only question left is, are you in that group?